And, you know, it's underperforming a lot of the big names. There was that Nvidia earlier this year she got out of in the flagship fund entirely.
Now some of those loyalists might be bailing.
Our asset retention has been spectacular. I think everyone would agree with that.
Let's talk about Ark Invest and their recent performance. They've been on fire lately, especially their main innovation fund called Ark. It's been soaring up more than 40% in the last 3 months, and just in the past month, it's gone up by 12%. But here's the twist.
Our asset retention has been spectacular. I think everyone would agree with that. Asset retention through 21 and 22. We're up more than 50%, some of our funds 60% plus. So there would be natural profit taking. I do think we're beginning to see investors shift from the NASDAQ 100 or NASDAQ, take maybe losses or gains there and into our innovation fund, because I think the values when it comes to innovation are in our fund.
Cathy Wood, the head honcho of Ark Invest, has been making some eyebrow-raising moves. She sold off Nvidia shares right before they took off like a rocket. So, the big question here is, if she's ditching Nvidia, what's she getting into? Let's break it down further. We'll take a look at some video clips where Cathy Wood talks about her major trades. I've trimmed the clips to the juiciest parts so you're not wasting your time. So, let's dive in and figure out what's really going on. Your time is precious, so let's jump right into it. Big shout out to Seeking Alpha for sponsoring our video and its analytics. Make sure to get your 14-day free trial of Seeking Alpha Premium via the link in the description. You can only get the 14-day trial through the link below, so make sure to check them out, guys. Also, if you guys sign up, the commission will help us stay alive, the channel that is. Alright, let's get back to it. Let's break down what's been happening with Ark Invest. Cathy Wood, the CEO of Ark Invest, has been making some moves that got people talking. In a recent interview on CNBC's Tech Check, she discussed how their ETF, particularly their innovation fund called Ark, has been doing really well. It's even outperforming giants like Microsoft, Alphabet, and Apple. The success is partly fueled by their top 2 holdings, Tesla and Coinbase, both of which have more than doubled in value this year. But here's the catch: Cathy Wood missed out on the incredible surge of Nvidia, a tech company. She sold off her entire Nvidia shares back in January, right before it skyrocketed.
Rally. You've missed, because the flagship Ark Innovation ETF, you sold out of your main stake back in January. Why?
Yes, so if you, we're very positive on Nvidia. We have been very positive on Nvidia. We bought it down when it hit nearly $100 in the fourth quarter last year. And then it tripled as some of our other AI-oriented stocks stood still. So, we're looking at, believe it or not, many people do not believe this about us, we're looking at relative valuations of names in the AI space. And we were looking at Nvidia at 25 times sales, which is where it is. And Tesla, which is probably the biggest AI story out there, is at 6 times earnings. UiPath yesterday, not earnings, 6 times sales. UiPath yesterday reported it is a beautiful AI play. It too is at 6 times sales. And as far as Nvidia goes, there are a few reasons we take some pause. It still meets our minimum hurdle rate of return, so 15% at a compound annual rate over 5 years. And so you'll see it in some of our more specialized portfolios.
Yeah.
In the interview, she explained her decision-making process. They had invested in Nvidia back in 2014, when it was at just $5. It climbed to nearly $450, but they saw potential inventory issues brewing and decided to cash in. They bought back in later when the stock dropped, and it surged again. Now, about that Nvidia sale, Cathy Wood sold over a quarter of her Nvidia shares in the past quarter, even though Nvidia's value surged about 70% during the same period. However, Nvidia is still one of the top positions in Ark Invest's portfolio. Cathy Wood seems to be using Nvidia as a kind of cash stash, selling it to buy other undervalued stocks she believes in. So, which stocks did she buy with the proceeds? Well, she increased her shares in companies like SoFi, Moderna, Meta Platforms, and The Trade Desk. She more than doubled her SoFi shares and boosted her stake in the others by about 70%. It's worth noting that there are two ways a position can grow, by buying more shares or by not selling shares as their price goes up. When you look at the overall position size increase, the biggest jumps were in SoFi, Quantum SI, Recursion Pharmaceutical, and Meta Platforms. In a nutshell, Cathy Wood and Ark Invest are making moves, selling off some Nvidia shares to invest in what they see as promising opportunities. It's all about navigating the market's twists and turns to make the most of their investments. Alright, let's dive into some interesting stuff. Meta Platforms, the company behind Facebook, has had an awesome earnings call. And now, the spotlight's on their analyst ratings, especially after this earnings report. It's like checking out a report card for the company. Around 92.5% of analysts still rate Meta as a buy. And guess what? Those analysts are making predictions about where the company's stock price might go. On average, they're thinking it could hit around $376 per share, and some even believe it could soar to $435. That means there's a chance for a 34% increase in the stock's value from where it is now. You might be wondering, hey, why is Cathy Wood from Ark Invest buying up so much Meta Platform stock? After all, isn't Ark Invest known for picking disruptive companies, not big tech giants? Well, I did some digging, and I think I've got an answer. According to Cathy Wood, the winners in the world of AI are going to be companies with big visions, global reach, and unique data. And guess who's got loads of data? Yep, the big tech giants like Microsoft, Amazon, and Google. But here's the twist, disruptive forces are at play. Take ChatGPT, for instance. It could shake things up big time. It's like either Google's worst nightmare or a wake-up call to do better. Why? Because ChatGPT could change how ads work, threaten the way Amazon sells stuff, and even steer you away from those search engines. Now, here's where it gets interesting. Google and Amazon make most of their cash by showing you different options, but ChatGPT can just give you a straight-up answer, plus keep refining it based on your chat. And here's the kicker. While Meta Platforms has a load of its own data, it's not really getting in the way of Facebook, Instagram, WhatsApp, Oculus, or Threads. It's kind of a trade that's flying under the radar, if you ask me. It's not just about data, it's about how that data is used to disrupt the game. Absolutely, Cathy Wood did make some moves with Nvidia, but don't overlook the amazing run that Meta Platforms has been having. They're in a much better spot now, especially since they're not spending billions developing the metaverse like they used to. Unlike Nvidia, which is more hardware-focused, Meta is primarily about software. And Cathy Wood thinks that's a big deal. Now, let's dive into why Cathy made these choices. When it comes to Nvidia, she believes it might have been overvalued at the time. Even though it's part of what she calls the Magnificent Seven, a group of companies leading the AI charge, there's growing competition. Other players like AMD, Tesla, and Google are stepping into the AI game with their own chips. So, the idea that Nvidia is the sole AI champ is a bit overhyped, and its price might reflect that. Cathy's not saying Nvidia is done for, though. If it goes through corrections due to inventory issues, she might consider picking up more shares. After all, Nvidia is still a strong player in AI, generating about $8 in software revenues for every $1 of hardware sales. This is a key reason why Ark Invest is all about software-focused companies, even in the hardware space. So, while Cathy did some selling, her focus remains on companies that are capitalizing on the software side of the AI game. Cathy Wood is placing her bets on software services that are built on top of AI technologies. Think of Tesla's self-driving software, or Roku's TV operating system. These are the kinds of stocks she's been investing in using the profits she made from Nvidia stock. Now, as we see how much Nvidia's stock has shot up in recent months, it's natural to wonder if Cathy regrets selling it early and what she'd do differently. But she's not regretful at all. She explains that she moved into other promising stocks like Tesla and Coinbase, which have also seen significant gains. As a portfolio manager, she's all about managing the overall portfolio's performance, so she adjusts her investments based on changing valuations. She does wish that the media had paid more attention to her early emphasis on Nvidia, which she started highlighting almost a decade ago. And she points out that we should avoid dismissing someone's success, like hers, just because we might have criticisms or disagreements with certain aspects of their strategy. Cathy's approach is grounded in data-driven decisions, and Ark Invest shares their research and trades openly for everyone to see. Remember, the best investment you can make is in yourself. It's all about learning, analyzing, and making informed choices in the world of investing.